Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Target reported earnings before the market opened on Wednesday, and results were pretty mixed, a little bit disappointing if you were looking for much growth from Target. But after about a year or so of volatility related to inventory, we've seen some improvements on that front. So I want to dig into the numbers and show exactly where I'm impressed with Target's performance recently. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content, and let's get right to the results. Here is the earnings release. You can see the high-level numbers. Sales grew 0.5%. Traffic grew 0.9%. That's something that Target is always monitoring because they want to make sure that people are still coming into their stores. Comparable store sales, so that's the sales at existing stores, not just from adding stores, up 0.7%. And then same-day services. This is always something that I've been watching, at least since the pandemic began, is how quickly is this business growing? This includes same-day services were up mid-single digits. I'll talk about that in just a second. Strength that they're seeing is in food and beverage, household essentials, and in beauty. The inventory side, you can see here that inventory was down 16% from a year ago and down 25% in discretionary categories. If you've been following Target for a while, you know that one of the challenges that they had in 2022 was they basically planned the business for a lot of the same buying trends that they saw in 2021. So during the pandemic, but people were starting to spend their money on different things. So they weren't buying yard furniture. They were looking for health and beauty items, for example, because more people were going back to the office, spending a little less time at home. So that changed what Target had to carry in its stores, and it just basically wasn't prepared for that. And it takes a little while to move that inventory through the system. Seems like we're basically through that. I did want to highlight the guidance range, which is from a low single-digit decline for the full year to a low single-digit increase. So Target's not expecting a lot of changes in sales this year, not growth, not a huge decline, just kind of steady as it goes. And that means that profitability will be somewhere around $8 per share. Here's a look at Target's stock price. So you can see that the stock is trading around 20 times, maybe a little bit less if we're at the midpoint of that earnings guidance, about 20 times earnings. So not exactly a cheap stock from a retail standpoint, but I want to cover a few of the things that I was impressed by, because this is where I think Target's really differentiating itself from a lot of competitors. You might know that Bed Bath & Beyond recently went bankrupt. Kohl's is facing challenges. So there is a lot of challenge in the retail space, but Target kind of continues to slowly move forward, not necessarily growing a lot, but really holding a lot of the gains that it gained during the pandemic. And these are a few of the things that I thought were impressive. Traffic is up. So I mentioned that earlier, but here's the big thing is that this is pick, drive up, and shipped. These are their same day services. So I'll use drive up as an example. This is a product that I use all the time. You can put an order in the app and just go drive up and somebody will put it in your car. Great service if you have kids or if you're busy and don't want to actually go in the store. And that's really been successful for Target. I think it really leans into the company's natural target market of urban people who have kids. And you can see that this category grew over 5%. That is on top of tremendous growth in pickup, drive up, and shift during the pandemic. So I think that's really interesting that this momentum continues. And I think this is changing shopping behavior. This is something that's probably going to be relatively sticky for Target. And that's one of the things that I'm encouraged by. The company says that they're investing in long-term growth, $45 billion in strategic growth initiatives this year. Have already opened 6 stores this year with plans on opening about 20. That's not a lot of new stores for a business the size of Target. So most of the growth that we're going to see is going to be organic growth or same store sales growth. One of the things I thought was interesting in the conference call is Brian Cornell, the CEO, basically right away in the call talked about how shrinkage or theft is a big problem at Target right now, something that retailers are dealing with across the country. But he said that this is going to impact profitability by about $500 million in 2023. So this is something that the company is putting a lot of focus on. I think they're leaning on a lot of local law enforcement agencies as well. And definitely a concern for closing stores in the future, something that Target has done in the past with locations where there have been problems with theft. So don't be surprised if you see that in the near future. It may reduce sales because of closing some of those stores, but may actually increase profitability. But overall, how should investors be thinking about these results and the last few years of Target? I think that Target has really found its footing in the modern retail age. I like to call this company Grocery Plus because you may be going to Target to pick up a few groceries and you go out with a number of other items, and vice versa. You may just pick up your groceries as you pick up some home goods. And leaning into that, the company's drive up and pickup services have really made their products more convenient. And that has been a great way to compete with a company like Amazon that doesn't have physical stores in the same way that Target does. So for a lot of us who are picking up small items every once in a while, even 2-day shipping is too long to be waiting. So this is an area where Target can serve customers. Now they're moving into more groceries, so you can do a lot of your grocery shopping online, pick them up in a couple hours without ever getting out of the car. That's the convenience that Target's leaning into, and I think it's been really successful. The fact that they're not facing a lot of the financial pressures that some of their competitors are in the brick and mortar space is, I think, really telling. May long-term allow them to take a little bit more market share, but that's not quite what we're seeing yet. There's a lot of macro concern that consumers are starting to cut back, and I think that's exactly what we're seeing at Target. But they're not going to cut back too far because this is a more of an essential store than it is a discretionary store. So this is a stock that I continue to stay invested in. I'm not buying shares right now because 20 times earnings is still relatively expensive for a retailer that isn't growing a whole lot. But I do think this is one of the highest quality retailers out there. And if the company can continue to grow and build up that drive up, pick up, and shipped infrastructure, I think this is going to be a great retail growth story, just slow and steady growth. So long term, I'm very bullish on this company. But what did you think about the results and Target's future? Love to hear your comments in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.